All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and take a look at the challenge here. We have Disney, Under Armour on the board. Both of them, moving here a little bit today in opposite directions. We're giving up a good portion of the small gain that was on Disney. It was up about 25%. Now it's up about 9%, something like that. Almost 10%. So a pretty come on, let's go. Type of day here for Disney, but nothing where we're at the stop. We're not at the stop level. We're not at the auto exit, and so holding on to Disney. This is what the chart looks like right here, and not the prettiest. Definitely not the prettiest, but we do have some low volume selling, so it would be nice to see a gap up tomorrow, break above today's kind of high price, and be off to the races here. But anyway, holding on to Disney, and then we have Under Armour, which is moving on higher here today. So nice to see. And here at 240 in terms of the options, so a little bit higher than it was this morning, not much. And we're still at the challenge gains right around 1100. So we just haven't been able to really get off that mark very much. Under Armour, not at its time stop, not at its profit target here, not at its exit target here as well. Needs about $1.30 to go, I believe. Let's see here, 26, 36. No, about 90 cents to go to get to its initial stop point. And so, we'll see. We'll see if she gets there. So hopefully she does, and even further than that. So Under Armour pushing on up nicely. So nothing really to do here with them. No new signals on the board as well. Though I'm a little surprised that we didn't see a signal come in this morning or this afternoon here on Chevron. I thought Chevron might signal. It does have the 3-7 crossover action on it. And, it's above the 39.1 here, above 50 on the 39.1 stochastics. So I kind of thought we'd see it, or we'd see a signal, but the consolidation risk on it is just too high. That component of it is just too high here on Chevron right now. So no entry there on Chevron. We have some downside 3-7 crossover action out there, but none of it triggering here. Alcoa, has the downside action, but consolidation risk just simply, very high on it. So not a signal there, even though I think, Alcoa, could be destined for single digits ultimately. It's not a trade opportunity there. We see things like U.S. Steel really kind of cratering here. This had a 3-7 crossover to the downside, and unfortunately, it didn't give a signal there with it. But we are seeing some of these material names that have had some nice bounces really crater. And really have a tough time of it here in the last several days. But, then you look at something like Arconic, and Arconic holding up phenomenally well, just continues to be, very strong. We saw a bullish signal on it back here. We weren't able to get into it simply because all our cash was tied up in other trades. But it has been pretty lights out here. We do have a downside crossover on Alibaba, but this is very similar to an Alcoa in terms of this rally that it had, just a little too strong to for the consolidation risk to be low enough to say, hey, you know what, chances are it goes on a strong downward trend from here. So not able to look at Alibaba in a bearish light for the challenge here, though it we can see some some further selling here within Alibaba. If you look at China, the FXI here today, you can kind of see it's kind of done something similar since the gap up on the, on the what do you want to call it? Trade truce between the U.S. and China here last week. The U.S. markets have tried to move on higher, but have pretty much stayed flat. But China has definitely, they've been selling the news there in China, and that sell continues. That sell continues. Now, there are some other things going on in China that, definitely are going to affect things. We still have the Hong Kong, situation going on. That is still, not in the forefront of the news, but still happening. Still developing as far as that goes here. All right, so that's where some of the charts are. I kind of went through and I'm like, okay, is there anything really profound to say about the market today that would be big and different? And today's not one of those days that you look at and go, wow, today's a major change type of day. Right. Let's face it. You look at the volume. The volume today will likely end and be lower than any day last week, including Friday, which was kind of slammed in between the holiday, and including Wednesday, which was a half day. And last week, volumes were pretty light. So, there is very little volume out there. And I really think that's kind of the, not kind of, that is the take from here today. Most things just simply aren't changing. Yes, a few stocks here and there, sure. But in terms of the overall market, we're not seeing any major dynamic change. Doesn't mean we can't see one tomorrow or later on, right? In fact, I would be surprised if we don't see some sort of dynamic change tomorrow, given the fact that we will be hearing from Fed Chair Jerome Powell, and I do think that is who the market's waiting for. We have the jobs report. Now the market wants to know, okay, Fed, are you changing your tune or not? And, the market's starting to go in and starting to price in, a rate hike, a rate cut a little bit differently. If we take a look at the CME Fed Watch tool, which we've brought up a bunch of times here, we kind of see how, things are changing here with it. But you can see there's for the 31st of July, the expectation is 92% for a 0.25 rate cut, right? There's still a little bit, expecting a 0.5 cut, but take a look at the change here, right? Last week, we had a 20% chance of a 50-cent rate cut. Now the market has dropped that to 8%. So, that's kind of what the jobs report has done, is it's taken off some of that, a small expectation of that 0.5% rate hike or rate cut. But let's face it, the market wasn't pricing in a 0.5 rate cut in a big way. Right, it was still something that was simply on the table, a mild possibility the market was pricing in. But then as we go out to something like September, right, the market is definitely priced in a 0.5 rate cut by September. So 0.25 in July, 0.25 in September to be cut. Now, if you look at that and you look at compared to last week, it's actually a little bit higher. Right? So the market's basically just saying all the jobs report did is mean the Fed's going to have to cut 0.25 this month and 0.25 in September. That's all the market has done, in terms of some of the shifting of their expectations, and the expectation that maybe there isn't another rate cut in September. Well, that is still just as high as what it was. So, just a small shift is what we've seen in terms of the market expectations with rate cuts. And tomorrow we'll kind of, hope to solidify some of that. The Fed historically has taken what the market has priced in and run with it. right? And the Fed has been very good for the last, since Bernanke, of signaling and saying to the markets, this is what we're looking to do. This is what you need to price in. Not in those words, but, very easily just saying to the markets, come on, this is where we're going. And then doing what the market expects. And, will we see that again? I expect that we will. If the Fed does want to push the markets a little bit higher, we could hear Powell maybe be a little more dovish, and that would help to push the markets a little higher. We saw U.S. President Trump going after the Fed again here this weekend, but it's one of those things where perhaps there's nobody in the world right now with more pressure on them to make sure the markets go up than the Fed. And there are not many times since the creation of the Fed where we can look and say the Fed's autonomy is in question. And how that changes in the future could easily be determined by whether they push the markets higher or push the markets lower. And I'm not arguing the correctness of anything like that, the right or the wrong. It is just the what. And, it is something where there are Fed advocates, there are Fed dissenters, and, for the most part, the markets just know, hey, the Fed is a part of it. But any kind of major dropping the ball by the Fed as perceived by, the U.S. government could be something where we see major change in the Fed or action start to take place for major change in the Fed in the years to come. And it wouldn't be a quick, all of a sudden type of a thing, but I do think that how the Fed handles things this summer will go a long way to Fed autonomy in the future. And if they are perceived to handle it well by certain governing bodies, the Fed's autonomy will remain intact, and if they are perceived to handle it poorly, they could be the blame. Even though they're probably not to blame. They would probably be the scapegoat, and we would likely see some pretty massive change take place there with the Fed. But again, as far as how does it affect trading here this week, keep in mind what the market has priced in. We'll hear what Bernanke has to say, what Powell has to say here tomorrow. He'll also be speaking on Wednesday, and if that differs from what the market's pricing in, we will definitely see a reaction come into play. All right. So recap, just holding on to Under Armour, holding on to Disney here into the close, and hopefully Disney gets a little rally into the close, and we see both of these gap up, and come on. Take off and go. Ready to get ready to see the next trade trading up into that 4 and 6 average true range move, and let's start pushing this challenge up into the 15 to 20K area here this week. It would be sure nice to see. But either way, we'll continue to track it, trade it, just as we have. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.